But let's talk about some stocks then. It's definitely Diwali for Bajaj Auto. That stock is trading higher after reporting a decent set of numbers, no problems over there. But in our special segment value add, I'm going to tell you 5 reasons why Bajaj Auto is in the green today. First, of course, is the good set of numbers that they reported. So revenue growth of 16.5% despite all the challenges in the export market, 25% growth in EBITDA, and the margins up 130 basis points on a year-on-year basis. Now, the second reason is that this margin improvement is expected to continue as per what the management told us a while back. That's because the raw material cost, lower raw material cost impact will trickle into Q3 as well, and the export realizations have picked up. So let's just get a bar chart for you on the screen about how the margins for Bajaj Auto have moved over the last 5 quarters. They have been trending higher, and now, as you can see, at 17.2%, expected to move up further. The third reason is on the export front, where there are a lot of concerns about the slowdown in the Nigerian, African as well as LATAM markets. The management has said that the worst of the export retails is now behind them. Exports should improve quarter on quarter, and the strength in the export market will continue. And that's something that the street has definitely liked. Apart from that, you also have in the domestic market, the management has said that the September retail sales were better than July and August. However, demand is still muted in the festive season, and they're looking at a single-digit growth coming in for the industry in the domestic motorcycle segment. Finally, the brokerages, right? Most brokerages have either cut their target price or their earnings estimates. But the good part is that the target prices are still well above the current market price. So on an average, it's anywhere between 4,000 to 4,500, with Goldman Sachs being the most aggressive on the street with a target price of 4,500. So here's a word coming in from the Bajaj Auto management on the way forward for the business.
The reason for the export realizations to be better is a combination of two things. Primarily, it's a mix effect because the largest geography of Africa, which is generally the lower priced models which go there, that weight for that reduced. But on the other hand, our sales in our business in LATAM and ASEAN, the penetration or the market share and the mix of our higher end brands like Pulsar and Dominar, that improved. That aspect of the business will continue because we are having very good traction. In fact, all our new models are just about to be shipped, and they're going to be making an entry into LATAM and ASEAN. As you know, quarter 2 was a record-smashing quarter for us. We have achieved our highest top line and our highest EBITDA in rupees crores ever. Of course, it was aided by pipelining the stocks in the domestic market. But nevertheless, given all the stuff which was going around, it's a very, very delightful performance from our point of view. And going forward, our whole approach is to maintain both the top line and the bottom line and the profitability as we go forward. The demand in domestic is still muted. It is not negative, but it is very marginally positive during the festive.